All right, understanding market cycles, how to prepare wealth transfer for the 2020 financial crisis. Understand that all market has a cycle. There's always some people make huge amounts of money and some got crushed during the crisis. The financial system has a flaw to begin with. Now mistake has been made, bubbles been formed, and it has to pop. You have two choices. You either let the bubble really pop and the weak hand, the bad player, the bad actors, they just have to go bankrupt and learn the lesson and then reset this whole system so we can grow healthily, more productive. Or you can keep doing this bandage, keep putting bandages on, keep doing chemo to prolong the life without the quality. That will make this crisis longer, more miserable, more painful, and more slowly. Now, the free market are fighting with the Feds who control the money system. And in this video, I would like to show you how can we stay at the receiving end of this crisis. Not only we want to protect our wealth, we want to come out more wealthier and then repeat this cycle. Because every crisis, when it's low, that's your shopping time. Now, let's dig into what I'm about to share, and just want to show you that this is my point of view only and it's for entertainment only, and I'm not a financial advisor. I'll probably say it 100 more times just to stress enough to do your own research. The key to maximum return, and I will show you in this video what is happening now, how to transfer wealth, what is the cash, the fiat currency is doing, what asset class that you would like to be in right now, what assets that you would like to get out right now, and in conclusion. So if that sounds good to you, stay tuned. I have more coming. Right. What is happening to the world's economy? Yes, we're in some kind of other crisis right now, the virus. In this video, I'm just purely talking about the financial side. Stay healthy, stay at home, wash your hand, do your thing. Still, you have to follow what is going on the other side of the world. Now, the monetary system faulty. The US dollar is designed to be devalued by something called inflation. It's about 2 or 3% a year. So your dollar is meant to be worth less and less by design. Now, the US dollar fiat currency experiment, we call it, start failing since 1971 off the gold standard. I made the video before and you can go back and check that out, so I won't be talking too long here. We're not going to blame what is going on, what happened. Basically, there's a whole bunch of things, many things happened, the debts, the Feds, mistakes made, bubbles formed, now it must be popped in order to reset. The virus is the last piece of domino effect resulting in economic collapse, creating excuses to blame. People like to blame something, blame the country, blame the virus to cause our misery, while the foundation was weak to begin with. Now, crisis in Chinese, it actually has two words. It contains danger and opportunity. So in a Chinese saying, when every time you have a crisis, yes, you can fear, but you can also have opportunity to thrive. Disclaimer, I'm not a financial advisor. I'm not a financial advisor. I'm just somebody with a passion and done her homework, and I'm not here to tell you what to do. You must do your own research, do your due diligence. It's your money, not my money, okay? So this video is from my point of view. You can take from it what you will. If you found this useful, then take it. If you find me bullshit, then you can not listen to it. And if you think the whole thing is bullshit, then don't waste your energy reading this anymore and just go watch something that you like. My investment strategy is based on my age, my earning power, spending, goals and values, and risk tolerance. I have a pretty high risk tolerance. I can afford to lose everything and start again. So if you think you can probably join me to be quite aggressive. But if you have a whole family, you have 3 kids, and you have parents to taking care of, and you have 3 mortgages, then probably don't do it. Now, how to transfer wealth? What do I mean by that? I mean getting in and out of the markets at the right time. Step number 1, start from market 1, which is low. So you buy low, sell high, harvest your profits, and repeat to buy the second market, which is low, and then you sell high and take your profit and repeat. So the market that you're switching in and out from must be something hedged against each other. So let's say if you have stock, you have stock A, stock B, stock C. When the whole stock market crash, everything go down. So that's not what I mean by market 1. So you see, everything has cycle. Understand the cycle will be up and down, and it depends on the length. So if you don't have enough money right now, you think, oh, I can't even meet, don't give up. Keep saving money. There's always another cycle, because there are always young people coming to the workforce, always young people save up money, and when they turn about 23, 25, 28, 33, they will accumulate some of the saving, and then they can start investing and make the money work for them. Don't give up. Now, we have the dot-com bubble. Most of you are so young. We have the housing bubble, and lucky I was still quite young, so I lost a bit of money there, but it wasn't huge amount because I didn't even earn that much anyway. So now, this everything bubble is my time to do this wealth transfer. If you don't think you have enough this cycle, just do the next cycle. And if you're like me, you kind of have some spare cash right now, you can see if you can learn something here. Now, what drives all this cycle is basically fear and greed. Whatever cycle, whatever market is fear and greed. So listen to Uncle Warren Buffett. He said, when people's fearful, you can go buy. When everyone's greedy, you should go sell. Now, Bitcoin even has a fear and greed index. Take it with a pinch of salt. I don't think this is exactly you can follow, but just how funny. Now, okay, how to time the market? Here, you have the gold, and people were looking at this candle and these wicks and this thing all day long, and they think, oh, this is gold, 1, 2, 3, 4, 5, 6, 7, and then gold was moon like this, to the moon, and then we think, oh, Bitcoin is here now, we could be to the moon. Will it? Maybe not. We don't know. Or people think, oh, if this silver, I'll sell it here, buy the gold here, and then silver go down, and I'll buy the silver, sell the gold, and then repeat, right? Or look at the house market and the stock market, or look at the stock market. Maybe it's going up so like this. Maybe it should come down. It's time to come down. But it hasn't. Maybe it'll go up a bit more. We don't know. The point here is just invest early and often. So if you think right now it's super hot, like everyone is talking about it, then I will probably hold on a bit. Like if the new media, the news all talk about gold and Bitcoin and stock or house, then it could be the bubble's about to pop. Then I won't buy it. It's just me. So what's happening to the fiat currency? The central banks plan to save the economy by doing a lot of tools and tricks and financial things. Now, will these steps be helping or even hurting and kick it even down? Let's dive in and unpack this now, shall we? The Fed like to do, number 1, lower the interest rate. Since 2008, the GFC, interest rate has already been so low. And if they keep lowering, it will become negative interest rate. I remember when I was young, my grandma, father, they kind of say interest rate was like 5%, 8%, 10%. But I don't remember, since I was working, interest rate is always kind of 2, 3, 4, 5, really low. And so in my mentality, I never thought I would put money in the bank because I know the interest rate just cannot meet up with the inflation. So even if they give you 2% or 1.5%, but if the inflation is 2 or 3%, you actually worse off, you know what I mean? So now, what do you mean by negative interest rate? There's books and many videos out there. Let me explain in the plain English that probably will relate to most of us. Now imagine, if you have 10K and you put it in the bank, and you might expect to get 200 bucks in return every month or every quarter or every year. You expect to have a bit of interest for that 10K from the bank, right? Imagine negative interest rate is the bank charge you a fee for you to put money in the bank. They won't call it interest rate. They will call it some kind of fee. They will do something with it. Like, why? What's the point? If I have to put a ton of gold into some security vault in Switzerland, then I have to pay a massive amount of fees. I will do it because the gold is valuable. The gold's going to go up and I will pay the fee for the vault to store my gold. Do I want to pay a fee to the bank to store my cash? Now, once the bank get your cash deposit, they're not store for you. They actually use your money to borrow to someone else with a high leverage. I'll explain that in the next section. Now, step number 2 for the Fed to help the economy is the bailout, or QE, or the many name. Basically, in plain English term, is money printing. The Fed is no ordinary bank. It creates monopoly money at the touch of a digital button. And the governments or taxpayer, us, will have to pay it back with interest. QE means the central banks printing funny money lent to the government to buy assets like bond, treasury, stocks, those kind of financial products. Or the government maybe give them away by stimulus package or build a hospital, build some road, build some airport. This is a good one. I like that because it's giving back to the citizen. Or they might pay off the debts, which is good because the debts are high. But the point is, they're using the money, which is printing out of thin air. Now, all of this extra money in circulation will devalue the dollar and create inflation. Let me explain. For example, if the government today and say, I will give every Australian $1 million and everyone to go and buy a Ferrari. Ferrari was $1 million per Ferrari. But then if every Australian has $1 million and every Australian want to buy a Ferrari, Ferrari is not going to be $1 million, it will be $1 trillion. That's how inflation, right? Or let's say the government say, I'll give you $1,000 per person. And then everyone will go and buy lettuce, right? And the lettuce price will go up from $2 to $5. Now, money supply expansion creates a short-term boom. For example, if everyone spend that $1,000 to buy coffee in the local coffee shop, so the coffee shop owner has more money, now they will go and spend their money to tennis lesson. So tennis teachers now have some money and they will spend the money to buy some hamburgers. Now hamburgers have some money and they will go spend it on their wedding photographers, right? So that will actually create productivity, product boom like 2008. However, they just can't print money forever or else it will end up like the hyperinflation like Zimbabwe. Look at this one. This is $100 trillion note. Do you see how many zeros at the background? What happened in Zimbabwe was that somehow they printed too much money that they have to keep changing the dollar, the face value of the dollar. And I think at some point they say the buy stuff, it double the amount every 24 hours. For example, if you go and buy a hamburger today, it will cost you 15 bucks. Tomorrow, your hamburger is 30 bucks. And the next day, your hamburger is 60 bucks. And then 2 weeks later, your hamburger is $473. And then 3 weeks later, your hamburger is 54K. You know what I mean? So people say, why can't we just print money to pay off debt? Why do we even pay tax to begin with when you can just print funny money? Now this YouTube make a really good answer, so you can just go see that one. Now number 3, the Fed, the central bank, they can use bail-in to save this economy. Now bailout is the government printing money to save the banks. Bail-in is the banks using your saving deposit to save the banks. Whoa, what do you mean? Now, they tested it in Cyprus in 2013. The government now has the model to copy this bail-in system. Australia has secretly passed this bail-in law last year. Why create this bail-in law in the first place if they're not planning to use it, or in case, right? Maybe they won't use it. Maybe this is their last resort. Because people may riot, you may have civil unrest, you may have more problems. But because this law is in place, we have to treat that seriously because they could happen. Now, let me unpack a bit more about this bail-in thingy. What is bail-in? Easy explanation. Look at this. You put the money in the bank and then they can go borrow to someone else. See? That's what happened. The money in the bank, they don't just store it for you, they spend it. This is a whole roadmap of bail-in. Let me just go to this one, probably easier. So the Fed or the banks, if they make money, they keep it. The iBank can make millions of dollars a month. If they fall, they go bankrupt and the government bail them out. Or now we even bail them in. Now what is bail-in again? This is a blur so long. In plain English, if your bank go bust, then your deposit, your saving will be taken from you and turned into the share of the bank. So in Cyprus, what happened is they have 2 choices. I think it was one night they say you can either have your money chopped in half. So let's say you have $1 million in the bank. Now you have $500,000. And I think they say you can frozen for a while. So let the bank use your money to save this problem. And they let you, let's say you can take $500 a day. And that's it. But then your money in the bank is frozen. Like if this is happening, I might as well put it in the stock market. Now, go to what assets that I'd rather be in right now. So this is just my opinion again. I'm not a financial advisor. Right now, cash is king. I'm not holding cash long term because as I just said before, you keep printing, you keep devaluing. So long term, I'm not looking good with cash. But as Alex from Nuggets News said, the US dollar is the cleanest shirt in the dirty laundry. I like that quote. During this uncertain time of planned restrictions, the Feds are again printing more money, way more than 28, the GSE. So now best keep some US dollar or just Australian dollar for the sales. But now before we dive into the wealth creation, go back to the basic first. Take care of your everyday life first. If you can't save any money after you pay the bills, or you're paying your student loan, or your credit card bill, or your car loan, personal loan, I'll make another video to help you with that. Now, let's say you already have your everyday life fixed. Let's say you have your 3 to 6 month or even a year emergency fund in place, and you still have some spare money and you want to make the spare money to work for you, then this cash is good for short term to hold. And then you can do the other thing that I'll explain next. Bitcoin. Now you all know that I'm a long-term Bitcoin bull. I can talk about Bitcoin all day long. I've been researching every day for the last 5 years, and I bought a house from that. And now, just my opinion, we don't know how it play out. I think 2020 will be a bumpy ride in choppy water. Right now, the Bitcoin price is going lower because everything is low. So imagine the big whale. The whale is going down. So all the little fishes, Bitcoin, cash, gold, silver, everything go down with it. And Bitcoin is really small. It's 0.12 trillion, not even 0.5. gold is like 5 trillion or something, like 5 or 10, whatever. This is a 0 point something. And the debt is like quadrillion, 6 trillion, right? So small, baby. There's so much room to grow. Now, why the Bitcoin fall right now? Many reasons. Some people may have to force to sell their Bitcoin to pay the rent. Maybe they bought it when it was $500 and now it's 5,000. It doesn't matter, right? They have to pay rent. Doesn't matter. There's many reasons. Now the smart cash will now buy the dip and shaking off the weak hands. They could be the day trader. If they see 20% off, like lower, they have to do the stop losses, right? For me, I'm a 4-year cycle hodler. I believe in the next 18 months to 2 years time, after the Bitcoin happening in May, so about 40 days time, after 40 days. I would think it's probably after July and August to see the results. So right now it's still low. It could be low deeper. We don't know yet. If you think you can't wait, just buy some. Now this cycle, price is expected to go up to 10 to 30 fold into the 6-figure range. Now it's about 10K or 7K or 6K, or people think it's going to go low to 4K, 3K, it doesn't matter. This cycle will go to 6-figure. And then we'll crash back to 5-figure. It will go down like 89% from the top. And this is the nature of Bitcoin cycle. So don't be scared. Bitcoin is not dead. This is the cycle. This is how they do. This is how we roll. So make sure you harvest your profit and get out. Ride the wave up to the top and don't get drowned to the water. Get out and buy cheap houses and value stock. That's what I'm going to do. Next is gold. Gold is now undervalued. With 500 years history, all the Asian people that I know of, the Indian, the Chinese, the Hong Kong, the Middle East people, they're buying gold. Even a lot of countries are holding gold right now. So expert was saying, like Peter Schiff, Mike Maloney was saying, once the USD collapses, we don't know when, we don't know how. It could be 2 years, could be next year, could be August, or could be 5 years. We don't know, but it will collapse. It depending how the Fed's printing money. Some people think, like Harvey Dent think it's gonna go deflation and then inflation. And Peter Schiff just say just go straight to hyperinflation. So we don't know. So people think once it go to inflation or hyperinflation, gold will moon to about 2 to 10x in the next 2-3 years. Even people like Jim Ricketts and some other people say gold could reach $5,000 per ounce. Right now it's about 1,500, 5,000, 50,000. But the logic is that money, it doesn't like mean anything anymore. Like let's say 50,000 can only buy you 2 hamburgers. You know what I mean? So now it's a good time to dollar cost averaging if you have spare money, and just get a little bit of gold. Even if you can get them, like you may not even be able to get them. Every time I go to the ABC bullion shop, always a long queue of Indian buying gold. It's been months like this. For me, I treat gold as insurance. I won't buy too much because A, is expensive. Like I actually can't quite afford to buy too much. So I have like 2 little small piece of fingernail, and I'm happy with that. Only because I have to wait that long, wait until the whole collapse and wait 2-3 years to get 2 to 10x, while I can just wait 2 years for 30x. It's just me. So I put little bit fingernail of gold, just like an insurance, and not paper gold, not gold stock, not ETF, not gold mining stock. It's physical gold. If you are well off and you can have like gold bars and bigger golds, then put it in those trusted vaults in Switzerland. Now, silver. I have silver more than gold. Gold I have tiny bit, doesn't really, like it's just so small. Silver I have it more because silver is massively undervalued right now. There's a huge industrial use for silver. Price is expected to go up to 10 to 40x in the next few years. Again, we don't know how it play out. Mike Maloney will have a whole explanation hours and hours to explain to you in books and books to tell you how to get there. You can go and search Mike Maloney and he will tell you better than me. Now it's around, let's say 12 to 18. When I buy, it was about roughly $16 per ounce. So imagine gold is 1,500 or 2,000, doesn't matter. Gold is like 20 bucks. So it's way cheaper. You can afford to buy a silver bar, a kilo bar is about $1,000 Australian. So if you have like $5,000 spare, just get 5 bar. If you even can get them, I think they're out of stock as well. So if you have 10K, just get 5 bar and then some coin. Jeff Barrett from the Dollar Vigilante say even will go up to 100 or 250 or even 500. But then again, like this Jim guy said, $50,000 for gold, it basically means money doesn't even worth that money anymore. Like 100 bucks is a coffee. You know what I mean? So right now, 18 bucks is a coffee. And then later, 100 bucks is a coffee. Now, gold will always moon first and then silver. So Mike Maloney has tons and tons of silver stored in those high security places. Again, get your physical bar, physical coin. Not your coins, then it's not yours, okay? The risk of silver and gold for me is that the government can actually take it from you. It happened before. That's why I'm not taking too much. So I have a tiny bit cash, can last me a month. I have a tiny bit gold, can last me a month. I have a little bit silver, can last me a month. I'm happy with that. And I have more in Bitcoin and stored in multiple places. Like security is massive for me. I can have another episode just talk about how to buy, sell, and store your Bitcoin safely. Next, so what assets to avoid for me? Stock market. It's crashing right now, but I think it's still overvalued. Now, in my opinion, it's going to go down even more. But how? We don't know. So we could be right now is here, it's going down, right? But then people may think we are just here. People may think we could go up more, or we might be here. It can go one more leg up. So you could risk, because you could still make another 30% and then buy the dip again, 10% dip, buy another 30% and then buy the 20% off. You can play that. For me, I won't, because the market has mysteriously gone parabolic for a while last year. It's just gone like double and double and double. Maybe due to the funny money printing and the government's buying Apple stock. I don't know, I can't prove. But it just can't go up forever. I think the bubble has to burst. And if you have made some money because you invested in the stock market from last year or the year before or 2 years ago, and I would suggest you just harvest some of your profits, minimize your exposure, perhaps just take your capital back at least so you can chill, right? Even if you crash to zero, you get your capital back. Now, personally, once it even bottom out, I won't put too much funds in it. Maybe the next year or 2 or even 3 years, once it die out and dry up, and then I would dollar cost averaging and buy my way up again into the value stock that I like the gaming. There's a few gaming stock, cannabis stock, natural gas, oil, emerging market, and then of course Tesla, AI, medical, blockchain. I like them. But I think a lot of these emerging market, they actually in cryptocurrency and not in the stock market. So in other words, I won't go anywhere near it right now. And I have a tiny portion in the stock market just to hang around, doesn't really matter. I'm losing a few $100 right now, doesn't really matter. Wait for the dip. And then when my favorite coin stocks cut in half or even 90% off, then I'll go shopping. Now, real estate. I always like properties because it can give you solid rental income, plus the house price keep rising and rising. Now, I grew up with this mentality of you must own 3 or 4 properties and then retire as a landlady. I know I have this weird, like when they say, what you want to do when you grow up? And I did say, I want to be a landlady. I always want to do many things. I think because my grandmother and my dad, they both have 3 apartments each, mortgage free, to renting out when they're living in. And so when they retire, they are pretty okay. And they also have stocks and funds and cash and businesses and cash flow coming in. So they're not worried. They're pretty okay. They don't rely on the government. They never really rely on the retirement fund. They just have the rental income as a main source of income already, because Hong Kong is really expensive. So at one point I had 3 properties as well. Now, however, I feel like the house prices in Australia and Hong Kong are too hot right now. Martin North keeps saying about the crash. Harvey Dent predict the real estate will even smash back to 2000 years, the price of 2000. That's what he said. I'm not sure. Lucky, I sold my investment property on Christmas Eve. Didn't take much profit. I make a video explaining how basically a big chunk of my profit I gone to pay tax, to pay the bank, pay the real estate agent, pay the lawyers. So after all of these people took a big chunk, then I left with my capital, and I left with 5 years rent free. So I wasn't too bad, but I didn't make much money. Lucky, this extra cash now saved me from this stay-at-home lockdown period. Now my personal plan is when Bitcoin peaks over the next year or 2, then I will buy cheap houses or buy back the houses. Wealth transfer, you have 2 choices, 2 options. A, time the market. Oh, by the way, this is not financial advice, just suggestion. Now, if you haven't got a huge amount of capital, then what you can do is like me, what I do, I sold my stock, I sold my real estate at the high. Is it the peak right now? I don't know. Will it go up even more? I don't know. Is it crashing? Like, did I sell it too late? I don't know. I'm happy with the profit I had. Now I think it's high. Then I sell it. I sold them. Then I bought Bitcoin. I didn't buy Bitcoin at the bottom. So right now it's about 6,000. I bought it at about 10,000. And I'm happy with it. So right now, even though I'm 40% down, I could have bought it cheaper. And I reckon it will even go lower to 5 or 4K. So I could even buy more, but it's okay. I didn't time the market right, because 10K for me was low enough, because I was looking at 100K. So for me, I bought it at 10K. I'm happy with 100K. Of course, I would be better off to get it even cheaper. And lucky, I didn't go all in. So I still have a bit of cash, a bit of gold, a bit of silver, as I say. So if the Bitcoin really did look down below 4K, I will still buy a little bit more. Not much, maybe 1K, 2K. Like, doesn't really matter. It's not a lot. So I'll wait. I don't know how it go up to that, to the 6 figure. Will it go to 10K, but then I thought it's finished, and then it go to 20K, then it go to 100K, 200K, and 300K. I don't know, right? So I will start selling from, let's say, double or triple, or let's say I buy it from 10K right now. I may start selling when it hits 40K, or I might need to eat and I need to pay my mortgage, and I might need to sell when it's 15K. Don't know yet. So I will start selling my way up, and then we'll see what happened to the stock and the real estate. Maybe they bottom out and then really cheap, and everyone want to sell their thing and get liquidation and get their cash. Then I will sell this and buy here, and then we'll see what happens. So let's say Bitcoin just keep, this is their bottom, the next cycle, and then they'll keep going up, and they may have some choppy water, and then moon for the next cycle, and then repeat. I don't know, right? And will the stock market go back up and then go down? We don't know. So this is what I think. Right now, sold my stock, bought some Bitcoin, see what happened, have a bit of spare, and we'll wait out for this virus, and then we'll see with Bitcoin moon. It may not moon. Like, I may be wrong. It could be wrong. Doesn't matter, because I have the emergency money, I have business, I have jobs. So this is number 8. Number 2 is, if you're rich and you're lazy. Now, if you're already financially free, you build your 7 passive income streams, you have a few healthy cash flow businesses, you have a large amount of cash sitting in the sideline doing nothing, you have $1 billion in cash, you have private jet, you have many mansions, you have holiday house, beach house. and you can't be bothered checking the market cycle, look at the candlestick, then just buy anything, just buy everything. If any one of them ruins and the other die, you'll still be okay. And any financial crisis just won't affect your lifestyle. Maybe it will hurt you. Maybe your asset will seem like your net worth is cut in half. But who cares? You have $3 trillion and then now you have, oh my God, 1 trillion. Like, does it really matter? So let's say you're the traditional guy, you just don't own Bitcoin. And what if Bitcoin really did 100x? Then you're missing out, right? But if Bitcoin not working, you have money, you have other things. So if you have lots of money, you can't bother and just buy everything. Now references. Below are some of my favorite go-to people when I follow them and gather my research. There's so many, I can probably name another 100 people, but these are my favorite. You can just screenshot this one and go check them out. Yes, some of them are weird, like this Billy Meyer. He got his information from the alien, the Pleiadians alien. Marina Jacobi, he channeled his information from a few group of aliens at the Council of Nine. I don't even know what they are. Bashar also channeled his information from some kind of alien. It is weird. I like to learn as many point of view of the same event before making my judgment. Take what I will at the time. Open to everything is possible. There's a possible to everything, but then I won't just trust everything because then it's religion. But I won't reject everything just because it's weird and I don't know about it. Even some predictions that sounds rather strange of this Billy Meyer, Marina Jacobi, but at the moment, they actually, everything that they say is happening. This is why I knew last year the stock market gonna go sky high, and I went in a bit. And he predicted the virus. He predicted the dollar's gonna collapse. He actually predicted that, not him, the alien told him, the California will have a massive earthquake this year, maybe June, July, and they say the financial crisis is same time at the California earthquake. But then he did also say people could change the reality. So maybe enough people to send love and peace. I know I'm talking woohoo. So they just give us this virus instead of a whole California massive 9-degree earthquake. We don't know. It's weird. Now, thank you. If you'd like to find out more about my money mindset coaching packages, contact me. And copyright for this PDF and this presentation, it took me a whole week to do this. Now, thank you for listening.